Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Monday the 12th of January 2026, and I'll be starting on a 4-hour time frame. But before you watch, please leave a subscribe, like, comment and share for me if you like this video. Now I'll be starting on the 4-hour time frame. The 4-hour time frame, as you can see, on the first candle opened today on the 6 a.m. but not 6 a.m. New York, right? On the 6 a.m. the first 4-hour time frame or 4-hour candle went and push up, break above and create a new all-time high at about 4601 at 0.38, correct? So that is a new all-time high at on the 4-hour time frame here, because it was able to break above previous all-time high or previous high and create a new high over here, and then a little pullback, right? And the next candle doing a push down, clearing off a little bit of buy volume because there'll be people following buy over here. So after pulling back and then pulling back up again, the next candle was able to push up and close as a green candle, signifying a bullish price action or a price action to the buy side, correct? So as you can see right now, the price is still in a price action to the buy side or bullish price action, which means we are still gonna wait to buy, but right now it's not the best spot to buy. Because why? The price is still around all-time high, or it is still quite near to the all-time high, and we are not looking to buy what? To buy near all-time high, because there may be a candle pushing down and start by accumulating buyers at support and then drop down to clear off buyers, which means right now if you want to buy, we could buy, but there'll be a lot risky. Then we wait for the price to touch support, triggering buy limits, and then after triggering buy limits, will the price start dumping. Then we will wait to enter a position when the price start dumping to the next support, but not touching the support, because our buy limits would be at the week before the next support, because price pushing down and not touching support, meaning price is gonna not touch support, because price wouldn't be triggering buy limits over here or accumulating buy volumes over here, which means if price push down to this week over here but not touching support and then start pulling back, or at least close as a red candle and start a reversal over here, which means price may be retracing here, right, to this week but not this support, and then start reversing over here. By starting a reversal, we can see that after a reversal is created successfully, we will only wait for the reversal to be complete. What is a complete reversal? A complete reversal is when a reversal is able to push up and then start breaking resistance. So a successful reversal is when a reversal is created, a red candle down and a green candle up, right? We don't call it a bullish engulfing or bearish engulfing, because I don't like calling it names. I look at the narrative behind each candle action, behind each price action. So by giving it name, it means we are not understanding the narrative behind each candle. So by understanding the narrative behind each candle, will we know what the candle is doing, what the price is showing us, and what it is gonna do. So a successful reversal over here is a successful one, but not a complete one, but not a strong one yet. Until what? Until either the price push up and break resistance over here, or price start creating a new resistance and then retracing and then pushing back up to what? To break resistance, or in ICT they call it a break of structure, but I call it a break of resistance. So by breaking resistance, which means this reversal is complete, right? When the reversal is complete, the next candle pullback or the next candle retracement over here, it is where we will start buying. So Now do you get that when we wait for the reversal to be complete is we wait for reversal to create and then create resistance and then break resistance. That is how we complete the reversal. So when reversal is complete, the next candle retracement we will buy. But for those who are experienced with the chart, they will start buying after the reversal is successful and then retracing. They will start buying over here because if you're experienced enough and you're in the market long enough to understand that price is really reversing, even though it hasn't completed the reversal yet, you'll be buying over here because you understand the movement behind each candle. You understand the movement behind each price action that it is showing. So by buying over here, which means you understand that price is starting to reverse and starting to push up. But if not, you need to wait for the price to break what? Break resistance. Because price needs to create resistance and then start breaking resistance is where we will buy at the next retracement. So by buying at the next retracement, we will wait for the price to push up. And then what? Push up and then break the next what? Next resistance. And by breaking the next resistance, which means the next candle retracing, we will still be able to buy because if you're buying like this is what I call scalping. But if you're buying only one position, you're only opening one position and you're waiting for the price to go as high as possible before you close the position. This is what I call sniper. But a scalper, they play by retracing, by pushing back up, touching resistance, creating a new high, but not touching the next resistance. It's where the scalper will close their position over here. And then the next candle retracement, they will start buying again. When a candle create a new high is where they'll close, right? Then a candle retracement, they'll start buying. This is what I call scalping. But a sniper, they don't open multiple orders. They open one and then they wait for the price to climb up, retrace, climb up, retrace, correct? Climb up and retrace. And when the price climb up high enough and needs to start reversing, it is where a sniper start seeing the price action is gonna change. The price action is transitioning from bullish to bearish. Or if you're not looking at the price action, you at least wait for the reversal to be complete by the next candle start reversing. And then reversing what? Reversing successfully, right? So if the candle reverses successfully and then the next candle retracement and then a complete reversal is created over here, which means what? Which means our order over here should be closed, right? This is how we're going to do it because we know that when price start reversing is where price will dump. It will either dump for a short period of time or it will either dump as far as it could. So if you have an order here which you snipe for, not scalping for, you'll start to close your position if candles start reversing and a complete reversal is created. So if this reversal is created, the next candle open and pushing up to create a top wick, it's where you'll close your position over here, which means closing your position over here, right? About 4539, right? And you'll be closing your position over here is where I'll measure the candle over here, 4537, 4539. If you close your position over here, you're getting how much of a pips? You're getting about profits about you're getting profits about 10,000 pips, correct? So isn't 10,000 pips enough for you to close your day, close your trading day? It is, right? Which means you don't actually need to open multiple orders. You only need one order that can help you close your daily goal, right? You guys all have a daily goal, right? Some people have a daily goal of about 3,000 pips. Some have a daily goal of about 5,000 pips. Some only have a daily goal of about 1,000 pips. But if you get one order and the order not just clear your goal for the day, but that order clear your goal for about 3 days, for about 5 days, you're gonna have to be able to rest, right? you're gonna be able to rest. You're gonna be able to do your own thing. You don't have to trade every day. You only need one order and you're fine with it. You only need an order a week or two, right? So this is where we're playing. So now you only need for the price to push down, or if you're buying over here, you can buy, but you need to do some money management, because by buying here you're risking your portfolio, because if price start pushing down more and then triggering buy limits over here, which means after triggering buy limits will price push down further. So by price pushing down further, you're gonna be able to withstand the risk over here that you're gonna incur, because if price is touching buy limit over here and needing to be able to clear off buy limits, so by dumping the price down, you need to know that the price is gonna dump down at least from about here at 4577. It will at least be able to drop to here, at least 4518. About how many pips? About 5,000 pips, because if you know you're not gonna be able to withstand 5,000 pips, you're not gonna buy over here, because you need to wait for the price to dump as hard as it could, and then after the price start reversing is where you start buying. That is a safe one for you to play, right? So if price is starting to move downwards like this, then retracing, then move downward, retracing, then move downward, you will only wait for the price to dump as hard as it could, and then when price start reversing, the next candle retracement you'll then buy. Correct? Because if the candle retrace but not touching support, not triggering buy limit, and you buy and then candle start pushing up, you know you got a good one, a good position for you to hold. At least this position will be able to hold you until what? Until it attack the next all-time high. So price, if it reverse from here and it doesn't intend to go down further, which means price is gonna retrace, push up, retrace, push up, retrace, and push up. So the next thing it's gonna do is after reversing, it's gonna attack the all-time high, which means if you're buying when the price dumps over here and start reversing, you'll have a profit of about at 4516 to close at the all-time high at about 4620. So 4516 to 4620, it is about a 10,000 pip. So isn't 10,000 pips enough for you to hold? Correct? So this is where I'm trying to help you guys. I'm trying to guide you guys to safely trading safely on the market, not risking more than you could, not opening more position than you could, only opening at the best position possible. There is always a good spot to open a position, but never ever open a position. Yeah, I want to emphasize that. Never ever open a position at sideways. Never ever open a position at a sideways down or a sideways up, because when price is moving in a sideways down phase like this, sideways down, this is what the price is doing, is the price is triggering buy limit again and again and again. So when it is in a sideways down, it is accumulating buy volume, accumulating buy volume, accumulating buy volume. So you're not going to play a buy position over here. You will need to wait until the price has accumulated enough buy volume, and then when buy volume is accumulated enough, price will start dumping on buyers. And when price start dumping on buyers, it's where you'll start buying at the dump, because price is gonna retrace after clearing off buyers. That is where we are not gonna buy. We will only be buying when price drop a sharp dump below, and we buy. Why? Because there is a chance of price reversing, because they have cleared off all buyers from the market like this. So never ever open a position at a sideways up and a sideways down, because that is too risky of a move, right? We will only wait for a sharp dump or a sharp soar. Okay, so that's all for today, I'm saying. So please be safe in trading. Manage your portfolio as well as you can, to the best of your ability. So for today, I'll see you guys later. Bye.